Hey folks, welcome back to the channel, and let's go over what happened to SPY this week because it was pretty eventful. This is the weekly chart for SPY, and the stock market had a really good week. From the bottom of the wick to the top, it's about an 18-point range, higher than your average week. When you're trading options with this, it's important to look at the trend and don't fight the momentum. Over the last 3 or 4 weeks, you can see the market has been moving up. So it's just most likely that this week it was going to be up, even though we had a lot of news and different events and earnings. So if I zoom out a bit and look at the stock market from a longer term perspective, you can see it's clearly broken out of this 2022 bear channel. And we're seeing the kind of move that the stock market has exhibited previously. So it is a healthy rally based on the angle. Like it's not going to be something like this where it went up really aggressively and then sold off the next couple of weeks. So based on the momentum, the next target for SPY should be up here where this green line is at 428. And that's because that was the previous high over here back in August. So we have higher lows. This is a higher low than this swing. And we also have now a higher high thanks to the Fed being kind of dovish this week, and also earnings of major companies like Alphabet and Apple not being too much of a disappointment. So normally when we have these higher highs and higher lows, it means the bottom of the bear market is in, and we're probably going to head higher from here. We still need confirmation, but for now, I think it's reasonable for the stock market to head up to the 428 level because it's already gone past the previous high over here around 408. SPY finished the week at 412, but it did reject 418 when it got that high and came back down. It's probably not going to be a straight line up to the previous high here, 428. It might zigzag a little bit, and that's what we're going to take a look at in the daily chart. So this gives us a more granular look, and it's in the afternoon right now. The market's just closed. And I'm going to go over my trades this week, especially today, and I'll explain why I traded them. But first, you can see that the momentum is still going upwards, especially these lines here. The green line is the 9-day moving average. The blue line is 21. And when the green crosses below the blue, like over here, the stock market tends to go down. And when the green line crosses above the blue line, the market tends to go up, especially if the lines are diverging like this. It means in the medium term, like over the next week or so, it's likely that this trend will continue. So overall, I think there's still more reasons to be bullish than bearish in this market, even though it's had a really good run over the last month. Okay, so let's take a look at my options trade. This is the first week of February. I made $86 on Monday, a little bit on Tuesday. I lost a lot of money on Wednesday when the Fed announced interest rates. I was expecting the stock market to go down, but it went up instead. So at the end of the day, what I did was buy some call options that were expiring the next day. And I'll show why I was bullish for Thursday. Here you can see my Wednesday tweet after the market closed. I said I lost $459 after commission. And these were my trades for the day. But over here, I opened 3 413 calls expiring on the next day, February 2nd. Which is Thursday. And I basically mentioned that I'm opening some calls for tomorrow because I am bullish. So that was tweeted on February 1st. And then on Thursday, February 2nd, so the next day, I closed those positions, the 413 calls. So I closed 2 of them at 378, and I closed another one later in the day at 348. So I made a pretty nice profit off of those because SPY did go up. And I bought those calls for $209. So I made over $100 for each of these 3 calls. So that's why Thursday had a pretty big profit, over $1,000. And then Friday, I'm going to go over the trade I just made like this morning. So Monday, Tuesday, let's take a look at the chart here. I'm going to go to the 15-minute so we can see more closely a day-by-day kind of event. I've turned off extended hour bars just for simplicity. So Monday was a down day, but it was pretty consistent. And I like to use the MACD indicator here. Basically, if the blue line is below the red line, then that's bearish. If the blue line crosses over the red line and both are heading up, then that's bullish. So Monday and Tuesday were pretty straightforward. Wednesday, it was mostly flat for the day because everybody was waiting for what the Fed was going to do. As expected, they raised the Fed's funds rate by 0.25%. And Jerome Powell was talking surprisingly dovish. The market went down first, and then it went up a lot. And at this point, you can see the MACD over here went pretty crazy. Not only did the blue line cross over the red line, but it did so in a very abrupt way. And also notice how by the end of the day, they were continuing to diverge. So that is a sign that the next day, we're probably going to open higher and the market is going to go higher. So that's why on Wednesday, I bought those three calls. I think it was 413 calls, which was right around here. So just out of the money, so it won't be too expensive. So that's part of the reason why on Wednesday I had negative cash flow. I lost money is because I bought three calls for about $200 each. Now, come Thursday, I was a little bit nervous when the market started to sell off, but when you look at the MACD, both lines are still going up. And I think it was around here where they started to converge again that I sold two of my three calls. And then I think later in the day, the blue line of the MACD crossed below the red line, and I decided to get out because the upward momentum had basically stalled. And I sold my last call option there. And then I made some more trades yesterday, Thursday, but those were smaller positions. And it was kind of hard to trade this area right here because the market went down and then up. And that basically takes us now to Friday, where I made $167 today. Let's take a look at my trades here. I'm basically just grouping them by the underlying. So I did not have too many transactions for SPY today because the market was it was okay in the morning, but then in the afternoon, it became kind of unpredictable. But anyway, so what did I do here? At 7:10, so early in the morning, I bought two call options, the 414 call option at 118 each, and then I sold those two call options just before 10 o'clock at 224, so almost doubling my money. Okay, so here's what I was thinking. I usually use the 5-minute candlestick bars. I find this is a good time frame for trading that doesn't require you to always be looking at the charts, so you can do other things while you're trading. Okay, so the MACD is on the bottom here, and we're looking at this day here. So the day started off lower than yesterday. It went up, down, and up, and around here, it says 10 o'clock down there, but it's 7 o'clock my time. You can see that the MACD, we had a positive cross where the blue line went over the red line. So at this point, I thought it would probably be a good time to get in, especially when there are these large wicks over here. So I noticed that these two bars, they both wick down, which means this is a double bottom. The overall direction is going up, and you can tell because you can draw a channel like that, and the lows that these two bars put in did not go as low as the previous lows of the day. So overall, the trend is going up, double bottom, and then this big green candle here, along with the MACD crossover, made me bullish, so I bought calls here. And then I sold my calls just before 10, so that would be right around 12:50. And why did I do that? Oh, right, because we have two MACD peaks that are going down. So over here, the blue line crossed below the red line. That's bearish. And then it tried to go back up, but then over here, it went down again. So because this second time it crossed is lower than the first time it crossed, you can sort of draw a trend that is going downwards. And because of that, it's very likely that at least in this session, the top has already been made. And the final thing I did in terms of SPY is I just bought a 405 put expiring on Monday next week, February 6th. And the reason is because even though I'm bullish on the market next week, on Monday at least, I'm kind of bearish because I'm going to jump over from 5 minutes to the 1 hour time frame because 5 minute is good for intraday trading, like if I'm buying or selling options that are expiring during the day. But I like to use the 1 hour for multiple days. And if I use this, you can see the MACD has crossed over here, the blue line below the red line. And also there are all these wicks up here starting from yesterday. And especially today, we had basically rejection of this level around 417. And it just seems like the market has a really hard time going above that level. So yeah, 405 put, it's very out of the money, so it's not too expensive. I just paid $21 each for two of them. And then the idea is if the MACD continues going down into Monday and SPY continues to go down, and we have the 9 EMA crossing below the 21, it's very likely that SPY is going to drop to around this level, around 107 or 108, because that's where the previous resistance level was. There's really nothing else between where it closed today and to the next support level, which was resistance before. Right now, I'm losing about $15 on them, but we'll see on Monday what happens. But other than that, I do have another bear call spread over here. So this one expires on Friday, next Friday. And I have a 430, 432 bear call, which means I sold the 430 call and I bought the 432 call and just made a little bit of money. But the idea is I don't think SPY is going to go all the way up to 430 by next week. Because if I take a look at the daily chart, you can see it's forming this nice channel here. You can see the highest it should go to, assuming it's going to continue in this channel, is going to be about 421, which is why I think 430 is a pretty safe bet to sell a call option up there. The other reason is because 430 is below 428, and as I mentioned earlier, 428 is the previous resistance level. So when it gets there, I expect there to be some consolidation or some kind of resistance or pushback before it goes through. So very short term, I'm kind of bearish because I think the SPY wants to come down and test this 9-day EMA. So that's going to be around 407 or 408 on Monday. If the 9 EMA holds, which looks like it has been over the last couple of weeks, then from there it should bounce and head higher. So over the next week, I do expect SPY to move higher. So finally, we'll just look at all the results together. As I mentioned, I earned $891 this week, which puts my total return at 5.11%, which is not bad in 1 month. However, the year-to-date return of the S&P 500 is 7.82%, which means if I had just bought the index instead of doing all my options trades, I would be in a better position right now. But it's only week 5, so there's still plenty of time to beat the market, which is the whole point of my challenge with this. So I'm excited to see how things progress from here. And stay tuned for early next week when I will be going over my other option challenge, which is with Alphabet. I did some trades today on Friday, just took advantage of the higher volatility and bought this short strangle at 104, 109, along with some other trades here. So just to give a quick preview, my total return has now gone up to 6,500. So just like with this video, I'm going to explain my trades for Google next week. Thanks a lot for watching and for following along on my options journey. Hopefully you're able to learn something new from these. Good luck with your investments, and until next time.